Most traders lose money, not because they lack a strategy, but because they do not really understand what the market is doing. If you are in that category and you are seeing this video, that changes today. My name is Juliet, and welcome to Finspoke, where we make financial literacy and trading practical so you can apply it, and be profitable so it can actually impact your pockets. If you are new here, hit the subscribe button because every week we drop videos that make trading, investing, and money management simple for everyday people. Today, I'm breaking down market structure step by step, break of structure, change of character, and smart money concept so you can stop guessing and start trading with confidence. And I'm doing it in just 12 minutes. So stick with me because that will change the way you see charts. I have also a free downloadable guide for you for watching these videos and a way of saying thank you for being part of this family. Head over to the description and download it and make good use of it. Let's go. So let's get into the chart. What is market structure? I said the market structure is basically the roadmap of price. It is the framework that shows you if the market is trending up or trending down or just ranging sideways. Without this, every trade feels like a gamble. So if you look at it, you see that the price is moving to the downside. And as it's going to the downside, it is actually creating a structure. So this is basically what we mean by roadmap to the up for uptrend, roadmap to the down for a downtrend. Then when price is not moving to the up or moving to the down, it is just stuck at two levels, which is this upper level and the lower level. We say that price is ranging or consolidating. Your job as a trader first is to figure out where you are on this roadmap. Are you trending up or trending down or sideways? Because that determines everything else. So when you identify where you are standing in the market, next is to mark your swing highs and swing lows, as I've done here. This is your swing high, swing low, swing high, swing low, just like that. For the price that is trending to the upside, these are the turning points of the market. They are the points where the market gets to and it will turn. It gets to this point, it turn and move down. Get to this point, move down. Get to the point. So they are the turning points. Why price is doing this? It is moving to a particular direction, and in this case is the upside. And why it is also creating a turning point of this lower high and lower low. It is doing it and it is pushing price to the downside. Now, you can say that at this point, price is trending to the upside. At this side, it is going to the downside. And this place, you can see that price is just ranging inside these two parallel lines. And that is when we say that market is asking you to pause. Pause means hold on, stop, wait. So when market is moving to the upside, when it gets to a swing high where it cannot continue to go up, it will start coming down. That is a reversal. This is the up movement. This is the reversal. And this is the sideways. So if you can identify these highs and lows, when these highs fail to appear in the market, you will know because what it normally shows you is there is going to be, or it could mean, a possible trend shift is coming, and you have to also adjust. Now let's talk about break of structure and the change of character. That's CHoCH. First, we said that break of structure happens when the price breaks the most recent high. That is, if price is going to the upside, or the most recent low if price is going to the downside. It is a signal that the trend is likely continuing. For example, at this point, before the formation of these ones up, at this point, we assume that this is the most recent high. When price break this high to get to this level, we say that a structure has been broken. From here to here is where the structure was broken. When price break this level, it will now give us another high. And there will be a pullback to create a low which validates this. A CHoCH happens when price breaks this flow of higher high and higher low. When price fail to create a strong higher high, instead it come down to break the most recent low, and the pullback to create another low. When it retraces like this and it creates this new lower low, that is the confirmation that the character of this market, has officially changed from being bullish to bearish. At this point, you might start looking for entries at this supply zone because the trend has flipped and sellers are stepping into the market. This is what we call change of character. CHoCH. You might want to watch this video over and over again for you to be able to understand this and make good use of the knowledge by applying it. Like I said, I'm going to use two methods to show you this inside this chart now. First is the most simplest one, which is using an indicator to identify it. You search for SMC structures and the fair value gap. This is it. The moment you click on it, it will appear on your chart. Look at it. This indicator is on your chart and you are trading. Once the character of the market changes, it will show you with this yellow line. This is 4-hour time frame. The second way is you marking this break of structure with your hand. So when we want to find out what this market is doing, we look at this place. Depending on what you as a person considers as break of structure, because we have three types, we can say a structure is being broken. But I'm not going to discuss it. That might be a class for or a video for another time. So you just put your line like this. So this is the manual way of marking your break of structure. So this is it. Now let's look at the smart money concept. Both break of structure and change of character, that's CHoCH, are part of smart money concept. Now, smart money concept is an approach that focuses on what big institutions, hedge funds, banks are doing, not what the retailers are doing. The smart money loves to grab liquidity. What this means is that they push price above a recent high, or they push price below the recent low to trigger stop losses and then reverse the market. When they push price above the recent high, They want to clear the stop losses, then they will reverse the market and start moving the opposite direction. That's exactly what happened here. So when you see a chalk after a liquidity grab, it's often a signal that the market is about to move to the opposite direction with momentum. When you combine the market structure with the supply and demand zone, your accuracy skyrockets. You are not just trading a random line, you are trading from areas where institutions are likely to step in. Looking at this setup, this is actually a current trade that I'm in. You can see the trade is moving. This is an extreme supply zone. This is a resistance zone at this level. But this smart money, they came and they threw price above this resistance zone to grab liquidity because they know that people placed orders here. So when they grab liquidity, they now start coming down. This is more or less a retest after some level of consolidation. This zone was retested, and that was actually where I took this trade. Now, my first line of defense is this level. Price might react at this level. If it reacts, if I get a price reaction at this level, I might take a buy. But if it doesn't react here, I'm waiting for it at this demand zone. It will get to this zone and return back to the supply zone. This is where the institution made this move to the upside, and this is where they are making another move to the downside. At this point, liquidity was grabbed, and liquidity was also grabbed here before this move. So combining market structure, break of structure, change of character with demand and supply zone and the price action, that is rejections at the key levels, will give you a plus setup. And that's how you master market structure, break of structure, change of character, and smart money concept in just 12 minutes. At Finspoke, our mission is very simple: bringing financial literacy to the grassroots and help you turn knowledge into consistent results. So here is your take home. What you need to do on daily basis. Spend 10 minutes every day marking structure on your chart before you start trading. If you do this continually, you will be amazed at how much confident and profitable your trade becomes. We improve ourselves by doing, applying that knowledge. For a better understanding, watch this video, how I do top-down analysis and the best price action trading strategy. And don't forget to head over to the description and download your free PDF. If you want me to break this down live on a real chart, hit the like button, subscribe, and go to the comment section. Type or comment live market structure. I read every comment. Until next time, trade smart, stay disciplined, and keep building the financial future you deserve. Peace.